Today, we're bringing to you two attorneys that have been on the front line of the application process for the new PPP program. Matt, could you move forward the slide? Rick Schloss from the law firm of Hertz Schramm and Steve Canup from Focus Financial Partners. Our format today is going to be more question and answer oriented, and so I appreciate asking any questions via the capabilities of the program, and we've already received a number of questions that we're prepared to share with everybody. Keep in mind that all the advice that we give is general in nature. We're not familiar with your specific business or economic or tax situation. Therefore, please consult with your own experts, and our goal is just to make sure that we can answer specific questions in a general manner. Keep in mind also, with the passage of the CARES Act just 2 weeks ago this Friday, everybody has been scrambling. In fact, the program that we're here to talk about, the PPP program, started taking applications only last Friday, and I would say you were lucky actually to get an application in, given the confusion and the systems that were not up or prepared to take applications at that time. At the start of this week, things have gotten a little bit better, and we've seen a lot more in the way of applications being accepted, but at the same time, we're seeing a lot of banks being backlogged and not able to process what they have, as well as the SBA not being able to process all the applications that have come in. So we're in a very difficult time, and it's only going to get worse as this Friday the door opens for applications for independent contractors and for self-employed individuals. And there's been very little guidance on a lot of the questions that have come about for those two classes of people as well. So with this, I'd like to turn the program over to Steve and to Rick to maybe add some comments. Rick, do you want to start with any opening comments?
Yeah, thank you, Andy. This is the most dressed up I've been in 2.5 weeks. So what I wanted to do is just give a very quick history of where we started and where we are today, leading off some of the details, but just sort of give you an overview of how this whole thing evolved. The CARES Act came out on March 27th. So able to apply for a loan 2.5 times your average monthly payroll. This was determined from the date of the loan backwards, which is always interesting if you actually get a loan, how you determine your payroll backwards, but for a year. The compensation you could use was limited to $100,000 per person, but there was uncertainty as whether that amount included the benefits that an employee received. When it came out, the loan term was 10 years, 4% interest, so pretty good terms. No guarantee required, non-recourse, and the deferral of the first payment was from anywhere from 6 months to a year. It wasn't determined, it's just that 6 months to a year. Then there was a forgiveness of part of the loan based on what you spent during the 8 weeks following the loan on payroll, rent, mortgage interest, and utilities. There was no allocation between these items, they just defined what they were. But any forgiveness was non-taxable, which again is another benefit. And I didn't see any restrictions of what you could use the money for after that 8-week forgiveness period. So that was on March 27th. April 1st, the Treasury got involved. And they said, no, we're changing this. This is going to be a 2-year loan with a 0.5% interest. So the banks pushed back on this, at least what I was told, because it wasn't enough for them to participate. It was still not clear whether the benefits added to the comp of those individuals earning more than $100,000 in salary were included. And then it was a 6-month deferral on the first payment not 6 months to a year. April 2nd, the SBA changed this to a 2-year loan, same as the Treasury, but a 1% interest rate. So they were trying to placate the banks. And then they put in a requirement that you spend 75% during the forgiveness period and thereafter on payroll and payroll benefits, and 25% on other things like rent, utilities, and mortgage payments, mortgage interest. And finally, on April 6th in the evening, it was made clear that the benefits amount were not included in the comp on those making more than 100,000. So you could add the benefits in that amount to determine your payroll. Also, and they also did that same for the forgiveness. There was a question on how you figure payroll for the forgiveness. And they also clarified that independent contractors were not included in payroll since they could apply, as Andy just said, for their own loans. And they said, finally, that you could calculate the payroll you're using either on the calendar year 2019 or the prior 12 months from when you start calculating it. So that's sort of the overview of how we started and where we are today.
Great, thank you for that update. Maybe, I think the next high-level overview might be if somebody, maybe Steve, you can give a kind of an overview of where we are in the application process today and with your dealings with banks, and is anybody getting anywhere, or are we totally in a free situation? Just give some very high-level comments before we get into specifics.
Yeah, thank you, Andy. And one clarification, I am not in the esteemed group of lawyers. And do not hold this against me in today's environment, but I am mostly a banker by background, but I have no responsibility for the current mess. As Richard shared, it was a chaotic rollout, not a lot of clarity up front. Today, most banks that are taking applications are processing it, as you've seen and many of your clients have seen. Some banks aren't participating yet. Some banks will not participate. Those who have generally are limiting it to their own client base. Much of that is driven by the fact that the requirements for banks to verify clients, to comply with Know Your Clients and also anti-money laundering regulations makes it far easier and more efficient for banks to deal with a known entity, primarily firms that have had a credit line or an operating deposit account with them. In many cases, even banks that have customers with CDs or money market accounts aren't taking those clients as applicants. There are banks that have opened up the pipeline. We are fortunate at Focus Client Solutions to have 2 banks that will take non-clients through the relationship with firms such as yours and others in the Focus network, but that is somewhat of a rarity. Even banks that are taking applications are having issues getting into the SBA portal. So while we do think the program is underfunded, it's somewhat of a ironic good news is that the flows have not been as large as expected initially because of the issues getting access to the portals and applications. So there is still funding available. You can get into the pipelines and submit applications. We also believe that they are going to expand the funding for the program. If everyone eligible had applied initially, it would have averaged perhaps $12,000 per loan, clearly insufficient. It is being fulfilled on a first come, first served basis with the request. Indications are the requests are averaging $300,000 to $500,000 per loan. That would give somewhere around 1 million applicants funding with the current amount being put into the program. That's clearly a small percentage of the perhaps 25 million eligible applicants. So we do think they're going to have to increase the allocations in order to make this an effective program.
Great, thanks for that overview. Okay, we've been getting a lot of questions in. I'm going to try to group them a little bit. I think I'll start off with some questions on whether you qualify in the application process, and either one of you please jump in. The first one here is a question from a physician who's part of a large physician group of over 500 doctors, but they work in separate divisions. From reading this, I think I know who this is. They're basically in primary care. We operate independently. We pay our own bills and do our own payroll, as we always have. We have 35 employees in our division, and we will probably not survive without financial help. Is there any, assuming there's no relief from our parent group, is there any exception for situations like ours? Anybody want to take a shot at that? I think the issue is their legal structure and who's doing the 941s and et cetera. But maybe Rick or Steve, if you want to jump in.
Well, I mean, the issue is, I think that what they're relating to is an issue of an affiliated group, and if they're all under one entity, I think that they're stuck with and if they're over 500 employees, then I don't think that they qualify as a small business. If I'm hearing this right.
Yeah, the common ownership aggregation is an issue for many firms, even if you operate as separate entities. As long as it's an ownership that aggregates up, it's a disqualifying level of employees.
I mean,
okay.
There's.
Go ahead.
It's the issue of control. I mean, there's an issue of control and who controls who controls the group.
Some other questions that we've gotten in a similar vein are, I'm in a company with 10 employees and therefore look like I qualify, but we're owned by a foreign entity with over 2,400 employees. Do I qualify under the affiliated rules?
Well, that happens to be something I'm familiar with. So originally, when the act came out, the answer was no, because it qualified as an affiliated group because the ownership was by a foreign entity and therefore controlled the U.S. entity. However, they later changed the affiliation rules to allow, if all the employees of the entity were U.S., then they didn't taint it with the ownership of the foreign entity. So originally it's no, but now yes.
Great, thank you.
Now they qualify.
Some other similar questions are, if I have a company owned by a private equity firm and investors, how does the affiliated rules work for my situation? And a similar question here is, if I'm a sole, and I think we can answer this one separately, but it says if a sole member of an LLC, do you have to be an independent do you have to be an independent contractor? It's really a little different, but I think what you'll find for that last piece is that a sole member LLC will be treated as an independent contractor or a sole practitioner, and subject to the application that starts this Friday. But does somebody want to get back to the other piece of the question?
On the last one, in the last question, Andy, I agree with you that, I mean, it's a single member LLC, it's a disregarded entity, be treated like a sole proprietor. The issue there is, how you figure the amount of the loan, and then I have a big question how you figure the forgiveness if it's going, because if it's a sole member LLC and you have no payroll or no employees, how do you determine it? The applications for sole proprietorships are supposed to start being taken April 10th, but everybody's waiting for guidance on this because I don't think anybody, at least everything I've seen, nobody really knows how to figure all the numbers.
Yeah, and then adding to that, I think that the guidance So the guidance hasn't really come out, and the banks have just now begun to figure out how to process the first round of applications. I don't think they are focusing on independent contractors and sole proprietors. They don't have the guidance. They are barely getting through round one. So while Friday is the open window, I suspect you may see delays from many banks in taking applications outside of the original W-2 based program.
Okay, one question that I think is getting away from the application process because it's creating some level of confusion. One of the questions was, I'm still unclear, when we talk about salary and wages, are we talking about gross payroll plus or including benefits and 401 contributions, et cetera?
Okay. All right. So the answer is you take everybody's comp up to 100,000. So if I make 150,000, I'm limited to 100. You then add the what the employer pays for healthcare, 401k contributions, profit sharing, unemployment, and so you add that. So it's not, so those benefits are not limited in the $100,000 number. And that was a clarification that we were all waiting for, because originally it was thought that all the benefits were included in that 100, but no, it's 100 plus. And in fact, our firm has, we have a schedule that we use for our bank that added all those benefits.
Great. Hopefully that added a little clarification at a higher level. Another question that came about is I take salary during the year, but my real income is from retained earnings. Can income be added to the calculation? I'm a sub-S corporation. And I think we've had a number of questions on S corporations and what one includes for compensation for the owner of the S corporation.
As far as I know, then as far as an S corp, it's only the compensation and not the net income or distribution numbers. And in fact, what I know, sometimes the owners will do what they call take unreasonably low compensation to avoid paying Social Security, the FICA, on that compensation if they get more. So they're sort of kind of catch-22. So if they take unreasonably low comp, that's the number you use. It's not the remaining income that they may receive distributions from. At least that's what I understand.
Okay. I'm going to take this question out of order, but I think it's going to apply to a lot of people. This actually comes from one of our clients, and it says, I qualify, but I'm having trouble navigating through the process. How do I get help? So who do you suggest people go to who are getting frustrated with the process and are small business owners?
Well, I can share what we've been, the advice we've been giving to clients is that obviously the fastest route is your local bank where you have a relationship. Primarily if you have a operating deposit account and lending relationship. You're going to be into their queue. It'll be easier to process. If your banks are not taking applications or they're having issues doing it, we can help them. And there's an email that can be distributed later of how to look at the package, the best way to assemble it to hopefully avoid delays at the banks. But it is frustrating, and we understand that. Some banks are going to take it, but they can't tell you when they can put you in the queue. They may give you a number, but not tell you when you can receive funding. Other banks just aren't going to have the time or resources to assist with any direct questions. They may direct you to a electronic submission portal, and that's it. But there are a few steps you can take to try to minimize delays or the chance of having the application kicked back. We're happy to answer that through email or phone calls if necessary. We think start first with your local banker. Try to get in touch with someone live at the bank and walk through the package and ask for help. Most banks are trying, especially community and regional banks are trying to assist. They're just having a hard time, as well as the applicants, and finding the best way through.
Great. We're getting a whole bunch of questions.
I think part of the problem,
Go ahead. I'm sorry, Rick.
I was just going to say that I think part of the problem is that like the loan officers really aren't schooled in what's in the terms. So, and they're following directions obviously from up above. So even with our firm, we were asked for information that didn't apply. Now, part of it was that it was just uncertain whether needed it or not. So it's a learn as you go type of procedure right now. And for those people who are on the call who are CPAs, the AICPA put out a list of what documents you should have ready in order to make the application. So you can go and see, but to make the application easier. I'm sorry, Andy, go on.
No, I'm sorry. We seem to be getting a lot of questions coming in right now at once for some reason on the forgiveness program. And I just wanted to highlight and remind everybody, the PPP program, the way I view it, is there's really two components. One is a loan, and it's meant to provide cash flow for hurting companies and to carry them through until cash flow from their business operations start up. And as Rick mentioned earlier, it's very favorable, 6 months deferred payments, and a 2-year period and a 1% interest rate. It's going to be hard to find something as favorable as that outside of this program. So number one component is that, cash flow. The second benefit of this PPP program is the potential, not requirement, potential that you can get part or all of that loan forgiven if you meet certain requirements. And Rick, it probably is worthwhile to, because we've been getting a lot of questions. I'll read one here. Can you please review the loan forgiveness details based on, let's see, we're looking at headcount and full-time equivalents. My payroll dropped from 2019 before this act came about, so I'm worried about the loan forgiveness and whether I will be able to qualify for the loan forgiveness if the stay-in-place orders are in effect beyond the end of this month. So does anybody want to talk about what they've seen from strategies and what people are doing from the forgiveness viewpoint? We have on the screen right now what the loan forgiveness rules are, but can one of you kind of give an overview and what you're seeing from a strategy viewpoint?
I mean, I'm not sure we've seen strategy yet, because truthfully, I'm waiting for some more guidance on this. So, I mean, just review the basics, is whatever you spend on your payroll and benefits, again, with the same $100,000 limit, but plus benefits between the period of getting the loan and 8 weeks thereafter, and plus and limited to 75%. So you have to, let me start over. You have to spend 75% of the amount that you lay out from the loan after you get it during the 8 weeks on payroll items, which is the compensation and benefits. The other 25% can be spent on your rent, mortgage interest, and utilities. So whatever that amount is during the 8 weeks after is forgiven. So and I know the question is, okay, I've laid off people or I've reduced people's comp, which is primarily has happened to almost every business. Should I bring them back? Because you have technically until June 30th to bring them back, not be hurt by and still get your forgiveness. Do I do that? Do I leave them off? And what I've been telling clients originally, which is what Andy just said. It is two parts. One is you're getting a very, very favorable loan. And if you use the loan as they want you to for payroll, rent, and utilities, then it's still a great interest rate and it's a good term, and hopefully your business will uh, get better so that you can pay the loan back. The forgiveness is just an extra. So it's hard to tell, and we have clients that are trying to evaluate whether they hire somebody back. So I've had this issue. So let's assume I hire someone back now to get the forgiveness. So, and by the way, the salary issues, if you haven't reduced them by more than 25%, you won't get dinked on the forgiveness. So, but let's assume you laid somebody off and then you hire them and you say, I hire them back. So after the 8 weeks, am I still obligated to continue to keep them employed if my business still is not doing well? And everything I've seen says, no, you're not obligated, and you can still get the forgiveness and you can still terminate them after that 8 weeks. I just think that it would be a little hard on the employee where you lay them off, they start collecting unemployment, you hire them back, and then you lay them off again. But, and there are numbers, based on how you look at this. So I don't know, I'm not sure there's an actual strategy to it. I think it's on an individual client and customer firm basis. I don't know if Steve, if you've seen anything.
No, I think at a macro level, obviously the program was designed to try to maximize the number of firms that could keep people on payroll, reduce the short-term pain of the closures and stay-home orders. But also, if you think about on just as a lifeline loan in the worst case scenario, if in January we had come out and announced to the client base that we could secure a loan at a 1% interest rate, and it was a non-personal guaranteed loan, there probably would have been a vast amount of takers. Ideally, it's used to keep people on payroll, keep the rents going. But at the worst, if you have to, and you have to use it for other purposes, it is a very low-cost funding to keep businesses going. So I do think it's, Andy, as you said, the right way to look at it as a two-step. One is cash flow and support. The second is if you can use it for payroll, rent, and utilities, then it becomes a grant and it's a double win. But it's a great program to cover a myriad of needs at a low cost.
It basically allows you to
happen going forward. The likelihood is right now they're trying to deal with the application process. The forgiveness process is going to be a lot more coming out on it. And I think I would address this now, not based upon whether or not you can get forgiveness, but whether or not you need the cheap money. And then the forgiveness, as Steve said, will be a icing on top of the cake later on if you can qualify. I mean, I have heard that there are people that are actually taking the loan, not using it, and locking it away until they determine how the forgiveness will work, and they're just going to pay it back if they looks like they can't get the forgiveness. But who knows? Steve, you had mentioned when we were offline that some of the banks are going through a unique process to control how these funds are going to be spent once they are dispersed. Could you maybe speak to that a little bit?
Yeah, that's a good point, Andy, is that the banks, particularly the banks we're dealing with that have provided access to clients that are not existing clients of the banks, are requiring two different accounts to be opened by borrowers. One is a disbursement account, which will be there just to take in funds from the SBA. That will obviously give them the ability to track and prove it went to a known entity that had been banking with the lender. The funds will sit there and then move over to operating accounts. You'll have to open an operating account with the bank that holds some meaningful amount of money. It can't be a de minimis balance. It has to have tens of thousands, if not hundreds of thousands of dollars in the operating account based on the individual business profile. The top level security for the bank is that it gives them the justification on know your customer and anti-money laundering. But it also then can track disbursements, makes it easier when it comes time for forgiveness to know that they've seen it spent on the correct amount, because the banks will have to verify in some form that you qualify for forgiveness. And you can imagine at 1% interest rate, even if the Fed is buying these or funding these on the bank's balance sheets, as soon as forgiveness kicks in, whether it's in June or it's extended out because of a longer stay-at-home period, the banks will be calling and saying, let's apply, please apply for forgiveness now. We need to get these off our books. So they'll be able to help you with these disbursement and operating accounts, kind of track where the money is. If you sit in the disbursement account and hold it, and as you said, just to make sure that it's there for an emergency, it's even easier to repay it and prove where the money went.
Right.
Let me go, Andy, Andy, let me go even further. So obviously to get the forgiveness, the bank and SBA are going to require very detailed records to make sure that you spend it properly. But after that, there's really no accounting after the forgiveness period. So you still have this money and you're still supposed to spend it on payroll, rent, utilities, etc. So my belief, similar to like funds during Hurricane Sandy and Hurricane Katrina, there's going to be audits, because if you spend the money for improper things, then the non-recourse goes away. So I think there's going to be audits, and I think that two account scenario that Steve talked about is great, because if you track what you're spending on the proper categories, then you should be okay. So it's a matter of just making sure that you have the records, so in case you are audited, because I got to believe there's going to be audits of these loans.
Yeah, Rick, I think that's a good point, is that there's a rush to get this money out. The biggest risk for banks and borrowers is going to be an after the fact accounting, is that when everything settles down, they're going to want to ensure that the banks acted properly and borrowers were the proper borrowers and acted in accordance with the regulations. So there's probably some loose process items put in place today, but everyone will be held accountable, I think, when audits come through.
Thanks. And Rick, since you mentioned Katrina, one of the questions, obviously a very specific situation, is can you apply and get PPP money and disaster loan assistance at the same time, or is it one or the other? Does anybody know that specific issue?
Well, you can get that emergency loan. You can get that. I mean, there's obviously different terms in the PPP, and there's forgiveness. The issue there is if you use it for payroll, then it comes off that forgiveness part. So, if you don't use it for payroll, if you haven't used it for payroll, because if some of these loans were already in effect, then it doesn't count against it. At least that's what I understand. Not as much of an expert on those as I am on the PPP.
Thanks. Well, I probably shouldn't be asking this of you, Steve, but I'm not even sure if somebody's trying to give me a ringer or not. But the question is there any way a focus firm operating company can apply and qualify for a PPP?
No, the operating companies aggregate up, as we talked about earlier. If you're part of a larger holdco with common control, it aggregates and it's above the limit on employees.
Okay. There are a lot of questions on that I think I'm going to unfortunately have to avoid, but on specific questions dealing with independent contractors. And I think the answer there is, for a lot of the issues, we don't know the answers on independent contractors yet, other than the application period for them is opening on Friday. We don't know how you're going to count some of the test requirements. And so I think we're all in a wait and see mode on the independent contractor general questions, but I'll go on if there are any specific ones and ask those independently. Another question we just got is we're a healthcare office of 24 employees. Do the exact number of employees need to remain employed to get the loan forgiveness, or is it a dollar calculation?
Well, no, I mean, you don't have to keep everybody. So it's not that I have to keep 24 employees. There's a formula that if you reduce the number of employees, then it affects, it doesn't get rid of the forgiveness, it just gets rid of part of it. So I'm happy to share at some point with anybody offline the formula, and you can run it to see based on the number. So no, it doesn't void the forgiveness, just you may not get the full forgiveness. And if you cut an employee's compensation by more than 25%, there's also a dink for that in the forgiveness. So no, it's not a total.
Okay, we're getting a lot of, we obviously have a lot of confusion because we have a lot of questions in the vein of, is there anybody that you can recommend, a lawyer or an accountant, to help me file as an independent contractor for a fee? And the answer is, there are a lot of people that you can use. I would suggest going to Rick. He's heavily involved in this locally, and I'm sure he can either help you or direct you to somebody in the local environment. Rick, I'm not trying to sell you, but I think that's the best way to answer that question.
As long as I don't have to pay you a referral fee.
You definitely don't. Again, we're getting back to a lot of questions on payroll. An owner who takes a draw, can the draw or guaranteed payment be included in the payroll number?
That is, and I've seen that issue raised by some accountants I talk to on a regular basis. I don't know the answer to that. That's an open issue. So the theory of it is that if I have a partnership or LLC, I'm an active owner, and I take a guaranteed payment. Shouldn't that be included like payroll, because it's subject to self-employment tax? And so, I haven't seen anything on it that says yes or no. I understand the argument that it should be, and it probably should, but I haven't seen anything that says it one way or the other. But I know it's an issue out there.
And I would encourage, I'd encourage everyone to watch for the updates. I suspect we may get daily updates from Treasury and the SBA. They're adding to and correcting the application guideline continually because of these questions. The initial form actually had confusion on what to include in the amount. Page 1 had simply salaries. Page 2 talked about the gross up for the 25% extra. And I think if not daily, then perhaps every few days, there'll be more clarification posted online about the program.
In that regard, Steve, if I'm not mistaken, Monday night's release did say that if you applied and your application was based upon prior understanding and the rules change, it doesn't mean you have to go back and reapply. Is that true?
That's what we've seen in practice, yes. You don't have to reapply. The banks can come back and help you adjust the application. There's no penalty. You're not at risk for using the earlier guidelines. And you can adjust the application without having it kicked back to you as inappropriate because it was changed de facto after you put it in. So I think that no one has to worry about putting something in early and then redoing it. You will not have to restart.
And the latest pronouncement did say that, so.
Okay, I think we've kind of answered this one, but since I'm a retailer and my store was required to be closed by the governor's order, I had to lay off all my employees. I want to take a PPP loan, but I don't know when I'll be able to reopen my store. I need to apply now and therefore get the funds too early to use for payroll because there's a deadline to use funds on payroll. Can my bank get approved and hold the disbursement, or is there any other solution?
As we spoke about earlier, I think in that case, the best solution is having the funds go into the disbursement account and just hold them there. Banks, I believe, are going to be very hesitant to get approval and then not disperse the money into that account. They're faced with a long line of applicants, a high processing turnover requirement, and having approval but not taking the money is something that banks, I don't think, are going to do. When you're approved, they're going to just fund the account they set up for you. If you're not sure how to use it or when you can or want to use it, just hold it in that account and determine what you do later with it.
So if you've laid off all your employees and you don't want to hire them back and use the loan proceeds, as Steve just said, you have a pile of money that's sitting there. And if it looks like you're not going to continue on with your business, then you can simply pay the loan back. There's no prepayment penalty. And since there's no fees for the loan, there's really no risk to you to take the loan. Now, if you hire the employees back, then you can get part of the loan forgiven. But otherwise, as we keep saying, it's a very favorable loan, and you should look at it that way. And again, if you decide that you're not going to reopen and not use it, then you just pay it back.
Great. A question, please go over what non-recourse means. Does that mean no collateral is required?
Yes, no collateral, no personal guarantee. No, it's completely not. That's what non-recourse means.
Yeah, it's a loan to
assuming you use the money properly.
Yeah, it's a loan to the business based on just the application. In this case, not even cash flow underwriting, but no, you're not putting collateral at risk, or you're not putting your personal guarantee at risk. Oh, as Rick said, it's the appropriate application. Bad actors will have recourse.
And I think the thing to remember here is the government is trying to keep you afloat. They understand there will be businesses going out of business, and as long as you've done everything proper, there will not be any negative consequences to that as far as claiming other assets you may own. That's part of the program. That's why they're doing this program. That's why they built in non-recourse. But again, as everybody said, just be very forthcoming. Don't try to hide anything, and try to do everything properly. A question I've gotten from a couple of people now is, I own more than one business. Can I submit for all of them, or do I have to submit individually for each business? My employees are working 0 to a few hours. Should they apply for unemployment?
In terms of the applications, it should be for each business. It's not a personal application. This is a business application. So every distinct business should apply for its own line or its own loan through their bank.
And I guess on the question,
Andy?
It's really, in my understanding, it's probably very specific to your situation, your future, et cetera. You can have your employees on unemployment. You can use the funds for other qualified costs. You just will not be able to take advantage of the forgiveness component if you don't meet the 75%
right.
Employment-related usage. Rick, did you have some comments?
No, I wanted to go back and just address an issue you raised a minute ago. So I had a client that asked me, says, so if I get the loan, I spend it properly, and my business still doesn't succeed and I have to file bankruptcy, do I have any liability then on the loan? And I said, as long as you've spent the money properly for the categories that you can, and then if the business still can't succeed and you have to file bankruptcy, again, it's a non-recourse loan, and nobody should be able to come after you for it. But that was a question. Just wanted to add that.
And somewhat, I think, tied into that is the question I just got. How should we interpret the representations required to obtain the loan? Given the uncertainty of the current economic conditions makes necessary the loan request to support ongoing operations of the eligible recipient. We are laying off people now and do not know if we'll survive. Are there any representation issues in the application process we need to be concerned with? Anybody?
You want to go? Well, I mean, I think it's a matter of you're using. I mean, if the intent is to use it to sustain your business and it doesn't happen, as long as you were honest in what you were doing at the application process. I mean, I think what's going to happen is the SBA is going to look at whether you've committed fraud.
Okay.
And as long as you've made in the application are true and correct as of the time you made them, you should be okay. But again, I mean, if you, again, so here, let's assume you're laid off a bunch of people, you take the loan. Now, if you spend the loan on the proper items, such as payroll, in order to try to sustain the business, then I don't think that the SBA or the bank would have any problem with that. If you take the loan and decide as I said before, and you're not going to reopen, then instead of paying the money, you should pay it back. If you take the money, you don't rehire employees, and you go spend it on inventory or something else, or you take a vacation with it, then you have a problem. So, and then I guess they could go back on the representation you made. But if you're making an effort to sustain your business and keep your employees employed, then I think you're okay.
Great. Great. This is a more general question. Most banks seem to be accepting applications from current customers. Our bank seems to be struggling with the application acceptance due to technology issues. They've stated that on their website they are currently not accepting applications. If our current bank is struggling with the application process, do you have any recommendations about how to approach other banks which we do not have a relationship with?
Well, I mean, Steve could talk in general. I'm aware locally. Well, first of all, I think that I know at least one bank that's still a large bank that's still not taking application. At least they weren't as of this morning. I think they're trying to take applications either later this afternoon or even this evening. I was told that a large bank is not taking any applications from anyone who was not a customer as of February 15th. And I've been told one other large bank has told some customers that like they're so inundated to seek other banks. There is, and from a client of ours, I learned about a local smaller bank here in the area that is soliciting loans because they're doing it to get new relationships. So I'm not happy if anybody wants to get me offline. I'm happy to give them the name of that, but it's sort of a mishmash right now.
And I've had some of the same experience. I've seen people try to go through their own bank on Friday and not get anywhere because of the technology. They went to a local or a smaller bank that was not trying to use a technology solution, but rather go through the traditional loan officer relationships, and they were able to get applications processed. And again, I think you can either contact me or Rick if you need some names, but at least as of Friday and on Monday, I have seen some local banks take on applications from non-customers. They will say that they are still there for their customers first, and the process will be much more difficult for a non-client because of the issues Steve raised originally with respect to all of the compliance issues the banks have to be concerned about.
Yeah,
Go on, Steve.
We have two of the banks in our network. The network that serves clients typically is about 15 banks. Two of those are willing to take non-clients. One because it's through the relationships of firms like Telmos. The other is they want new clients if they can process it. I think that the smaller community banks that did not use technology early on had a head start. Wells Fargo has announced they've used their allocation, will not take any more. Citi's uncertain. So that I think the bigger banks don't know what they're going to do on a broad basis. If your bank is not taking it, they may well refer you to some of the fintech platforms. I know that some banks were sending people to Cabbage, the online SBA lender, which is an option. But also there are banks, as you gentlemen said, you have some in your area that are taking applications. We have two that are doing that as well. You'll obviously have to move deposit accounts over, but there are some options. They're limited, but you have the ability to reach out and find the right banks who will put you into the queue. But the bigger banks are typically if they are taking applications and processing it, they can be fast and efficient. If they are not doing it, though, you really are locked out of a lot of options. And we can provide.
Wells Fargo was one.
No, go ahead.
I was going to say Wells Fargo was one of the banks I was referring to that said go somewhere else. The one thing is, and that just so like with our bank, since we're a loan customer, they have all of our financial information. So we're basically just submitting the payroll information and the backup for that. If you go to another bank, you're going to have to submit financial statements, tax returns for the business, et cetera, and maybe even personal financial statements for the owners. So it's going to be a lot more documentation you're going to have to provide.
I think one of the answers that we gave a couple minutes ago has created a lot more questions, and I'm going to read about 2 or 3 questions, and maybe you can highlight it. And they have to do with how you use the loan proceeds. And one of the questions was, can you use the loan proceeds for non-covered costs, such as can I pay off a higher interest rate loan that was used to buy equipment or a truck? A similar question is it a crime to use money for other than covered costs? So maybe you can kind of talk about what you can use the loan proceeds for specifically.
As I understand, originally when they came out, it was only the only time they narrowed what you could spend money for was during the first period. They didn't define it after. Now the same restrictions apply both during the forgiveness period and after. You can't use the money to pay off a higher interest line of credit or equipment loan. You still have to be spending it on the payroll, rent, mortgage interest, etc. So that continues on after the forgiveness period. And if you don't, and if someone does something, intentionally, then it's deemed to be fraudulent. And not only can the business be liable, obviously, for the loan, but also the individual owners who made those decisions. So, I mean, they just said it's fraud. I didn't get into the criminal aspects of it, but they'll deem it fraud.
Yeah. Rick, do you agree that if you're using it for non-compensation permissible activities, you need to keep your rent, utilities, those categories they've included, you lose your forgiveness if you go over the limit, but it is not a violation of the intent. If you just can't bring people back on, but your landlord's not doing rent forgiveness, or your lender for your building is not doing forbearance, that's okay. But if it's outside of the list provided in the guidance, that's when it becomes a problem. Is that your understanding?
Yeah, but I also think that 75-25 still holds over after also.
Yeah, and you
So
lose.
I still think that. So it's not just the categories, but I also think it's that 75-25 allocation that continues on after the forgiveness period. But again, you get to pay off in a higher rate loan.
Another question that came in, Rick, on the question of rent. If you're paying rent to a related party, does that qualify as rent? In other words, let's say you have a business operated through an LLC, and one of the owners personally owns the building, and you pay rent every month to the owner. Does that qualify as rent and under the intent of this law?
I've seen nothing on it that says yes or no, but I would think if it's an arm's length rental, then it would qualify. I don't know why it wouldn't. But there hasn't been any specifics on that issue yet. They may come out with transactions between related parties, but I haven't seen it.
Okay, I've gotten a number of questions from tax exempts, is there anything different with the application to a tax exempt and how it may apply? Example is we have a small religious organization with 2 pastors on staff. Can we apply, and how does this program impact us? Anybody want to take a shot? Or my assumption is whether you're tax exempt or not, I haven't seen anything that treats you differently. As long as I think they're treated the same. But is there anything that you've seen differently than that, Rick or Steve?
I haven't seen anything specifically. I mean, there's an issue that came up on affiliated groups with regard to churches and things like that. But as far as the application, I'm not aware of anything different, but I don't know. I'm not an expert on that part of it. I don't know if Steve's looked at it.
We have helped a few nonprofits through the FCS program. I do know that on Saturdays, I was on the phone with 2 of them, and they changed the application information for nonprofits on Saturday in the middle of the process. But again, they don't make you reapply, they adjust it. I think they've come back and made it easier for nonprofits. I do know they opened it up. Traditionally, the SBA had some exclusions for certain church-based entities and how much community service versus internal they were providing. I think now it's much broader. I'd suggest that sort of pulling up the new guidelines that have been filed over the last few days to look at it, because it started out differently than it is today. But I know that it's open to almost all nonprofits today or tax exempt entities.
Okay, another question, and we are getting close to the end here, and I'm going to try to limit it to just a couple more questions, and if there are any further questions, you can reach out to Telemus, and we've had a number of questions on how do they reach out to either Rick or Steve to get some of the names they refer to, and we will share with everybody if they reach out to us, email addresses and contact information. But a couple of questions are, what happens if, as a retailer, we take a loan, we're currently required to be closed, and let's assume that the governor extends beyond the 8-week window, what happens with the loan forgiveness? In other words, we can't, you know, everybody's been on unemployment, and we did not bring them back, and now the 8-week window is closed. I think my assumption, unless the law changes, and keep in mind this is flexible, there may be extensions of windows depending upon the severity of the situation. But my understanding is that if you have no payroll, you didn't bring people back and put them on payroll in the 8-week window, that you're not going to be able to avail yourself of the forgiveness period. But does anybody know anything different?
No, and I think, as we said, I think both Steve and I said, we really need clarification on this forgiveness. For instance, I apply for a loan today. I get the loan on the 10th, so I've got all this money. I have people I laid off. It says that I still get the forgiveness if I bring them back by June 30th. Well, how does that apply? So I've got the money, but I'm not paying them until June 30th. How's that going to figure? So again, I think there's a lot of issues on the forgiveness, and my hope is that they clarify all of this, because that's probably the most difficult part of this whole program.
I agree. I think that they rushed to get this opened, and they're going to look to how do they correct the back end as we go on. You know, it was yesterday when they announced they're going to try to allocate another $250 billion to the program because they knew that it was under allocated and run out of money fairly quickly. We've heard that there's speculation if stay-at-home orders are extended, they may adjust the act in order to extend out that deadline, but that's the best guess from some lenders at the moment. There's been no guidelines on what happens if we're still shut down past the end of April or in the end of June.
Okay, we just got a question in that I think we've answered, but maybe not clear enough. And this question says, I'm still unclear. I'm a retailer. Can I use any of the loan proceeds to pay vendors that are not specifically for rent, payroll, or mortgage interest?
No.
Okay.
The answer is no. Okay.
All right. Well, I think we hit our 1 hour mark, and I appreciate everybody for participating. And if we didn't have a chance to answer your question, feel free to contact us through Telemus website, and we will share whatever information you're looking for, or reach out to Steve or Rick and get you their contact information as well. Again, thank you for participating, and keep in mind this is a moving target. There'll be a lot of changes, and if necessary, we'll have a repeat of this when more is known. Thank you again for participating.